Happy Monday. Welcome to the Monday Market Update. My name is Nash Paradise, Director of Sales here at U Mortgage, and the government is still shut down, and it's a holiday. So we're going to hit this pretty fast and quick here, getting through all the news that you need to know, starting with last week's econ data, to which there was none. I know it shows a lot on here, but for all intents and purposes, we have no Bureau of Labor statistics, we have no jobs report, we have no real news. Now, let me tell you what is news and what did happen last week is we got some tariff drama late on Friday. So, all about China. Trump made a tweet and sent everything reeling. There is not a lot of stuff going on in the market right now that can be reacted to. We don't have the numbers, we don't have the information that we need. We are a data dependent economy and we don't have our own data, but we do have our tweets. That's right. We got information coming out basically alluding to the fact that there could be some more tariff drama, and that sent the bonds prices soaring, which sent the yields tanking. Right now, we got a 10-year yield at 4.03, which is well below where we've been. It's still above that floor. I've said for a while we need to break below that 4.0 on the 10-year yield to get some real activity, but we did close last week looking strong. Let's talk about what could happen this week and what will happen this week, but what should happen this week. You can see we got a ton of stuff on here. Let me decode this a little bit because a lot of this stuff may not be happening. But what is happening is tomorrow we've got Fed Chair Powell speaking. Anytime Jerome Powell speaks, the markets move. This is going to be the first business day and the first trading session after a 3-day weekend, in addition to after the tariff stuff was coming down. It should be a really, really interesting Tuesday. And I do believe, based on the late market movement that we had on Friday, we are going to see markets open up favorably for mortgage rates, unless Powell says something absolutely crazy at 11:20. But the opening anyway tomorrow should be interesting. What should happen later this week is all the big stuff. We should be seeing jobless claims, continued claims, core producer prices, all this stuff coming out on Thursday. And we'll get some of this on Thursday. It's not going to be on hold, so we should see the inflation data. I just don't know how impactful that's going to be. We expect the inflation data to still be, I don't want to say high, but still be holding pretty steady. There shouldn't be any major reactions yet since we just saw the first Fed rate drop, but we're going to have speeches from just about everyone in the Fed this week. Wednesday, we've got 1, 2, 3, 4, 5 speeches. Tuesday, there's 1, 2, 3, 4. Thursday, we've got another 1, 2, 3, 4, 5. It looks like everyone's talking this week. So we're going to be dialed in, paying attention to what's going on. What is everyone saying? And I think it's really going to start with whatever Jerome Powell says on Tuesday. We should be looking at seeing the same cuts that we were talking about. Let's see what we're forecasting right now with the updated Fed chart from the dot plot. We are all but certain to see that cut on 10/29 and should be looking really favorable for a second cut in December. So technically the third cut of the year, we should be getting that back to back to back, holding a little bit in the first quarter, but we need data. We need to know what the jobs numbers are, and I'm anticipating them to be low, slow, and kind of dragging along. That could even lead to a fourth cut in a row by January. So we'll see how these data points move. Regardless, the interesting thing on this chart is looking at the long-term projections here as we get into third and fourth quarter of 2026 is sitting pretty comfortably in that 275 to 325 range. I find it interesting that we're not projecting any of these long-term cuts to go beyond that point, but we're going to see a lot of what the Fed movement is going to look like based on what Chair Powell says. So let's talk about what that means for mortgage rates and what it has meant as we get into the end of last week. So, as you know, we had that nice drop right before the Fed hike dropped rates, and then Fed drops rates. Jerome Powell talks, says, "Hey, this dot plot, this is not, our business decision. This is not going to tell us what to do. This is just what people are anticipating. So it's not policy," is the phrase that he used. Rates went up, held steady. Saw that very little tick there at the end, that drop that was late Friday, and the market hasn't really had a chance to react to that yet. So we did see the last projection by the end of Friday, 30-year fixed average at 6.32%. We do have room to keep going down closer to 6.25, and I think we'll see that at the opening on Tuesday. But then it's wheels off. Anyone's guess as to what Powell says, where we're going. And until we get this jobs data, we're really in a wait and hold pattern, just trying to see what can come out. The tariff stuff can derail everything, as it has many times in this last year. So, lock it if you like it. We do have a good reason to believe that if the government shutdown ends with enough time before the next Fed meeting, we could see the exact same kind of activity we had before the last Fed rate drop, which were more favorable interest rates going into the meeting. And then, like it usually does, interest rates pop up right around and shortly thereafter. So have those conversations, make sure your clients understand waiting for the next Fed rate drop may not necessarily make sense based on the last four drops and what we've seen thereafter, but being targeted and specific as we get into the mid to latter part of October could be still a good rate environment for refinances, and we could have some good wins coming up getting into that meeting. So for now, we're holding steady. I hope you all enjoyed your 3-day weekend if you took one. If not, get out there, grind it out, and find some conversations that you can have with people about what's going on in the marketplace so you can be the expert and advisor. Until next week, have a great day.